Crude oil screaming higher to 10-month highs as gold and metals perk up. Meanwhile, traders are trying to figure out the dollar's next move. Here to help chart it all and break down the technicals is Michelle Schneider, Market Gauge partner. Mish, always great to see you here. I want to direct everybody's attention to the Wi-Fi Interactive. I'm going to be running some charts for you. I'm starting out with crude. This is WTI. Over the last 3 months, up 31%. And then when I change to a 1 year, you can really see the consolidation that it just escaped from. So how high does it go?
Well, people are talking about the big breakout over 90, and just as that line you drew showed that really 80 to 82 was the bigger area considering the consolidation. So if you just want to go old-fashioned charting and take the measure from the low to where the breakout is, you're looking at about a $20 move from there. So that puts us at around 102, 103, and that's purely technical. From a more fundamental standpoint, of course, this is a move based on low production, OPEC cuts, et cetera. Obviously, our strategic reserves being low here. And we're seeing this great rise on also the anticipation that demand will stay high. And of course, we're going seasonally now into a bit of a different type of demand where we're not going to be so much in the driving season now as we get into the fall. So I'm looking at it more like, can it go to 100? Can it go higher? Absolutely. I know commodities, right? They can be very emotional and they can go parabolic. But this has been kind of a very disciplined run up, if you will. So I'm not so sure how much higher it's going to go, but I definitely think as long as it holds 90, it's more upside than downside.
And Mish, I want to ask you about another sector where we can kind of sometimes see these strong swings, but lately it hasn't been as much. What do the charts tell you about the direction of small caps, especially when we head into the remainder of the year, the last few months of the year?
Well, it's so curious, and it's a great question, Diane, because they are very much tied to a few areas. Obviously, the retail sector, which would be looking at it through XRT, has been extremely weak, while the small caps have held up relatively well. And now we're seeing, especially today, it being stretched down closer to the big breakout it had if we just look at the Russell 2000 over 1800. So what's going to really happen now is whether or not we can hold that 1800 level. And particularly if the retail continues its decline, what happens if that goes down a little bit further? So small caps are actually outperforming just on a relative basis today. But you know what we're really seeing, I think, is after our oil conversation, is a potential pressure in the whole U.S. economy, even though we're hearing how strong it is about the soft landing, with the Fed on tap, what they're going to do, and how much can current rates hold up the inflation, which clearly we're seeing pockets besides oil starting to rise.
Mish, I know you're looking at XRT, that's a retail ETF, IYT as well, and then junk bonds. Just give us some idea, call out takers, and we want to know, I'll put visually what you're saying, or at least I'll try to.
Well, we're now talking about three members of my economic modern family, Jared, right? So we had Grandpa is the Russell 2000 because it really represents the 2,000 small cap stocks within the United States. So it's very U.S. centric, which is why it's so important for it to hold up. And very often it lags behind growth, especially over the last decade. But at some point, it can become an anchor. And of course, Grandma, which is the retail sector, really represents the other side of the demand of the U.S. economy because of consumers. And we've seen all of these big box stores, really, except for Walmart and Costco, having huge struggles and going down. And then transportation, obviously the strike would have some impact on it, but not too much. That also is reflecting now how demand is going down. And even though we've seen much lower prices in airfares coming into now, I think obviously we'll see airfares starting to go back up with oil prices. So all of this is not really saying disaster, but it's saying weakness and caution, especially if we're looking at these charts that are now breaking down under key moving averages, looking at XRT and IYT. Is the small caps next? And then what does that mean?
And so what does that mean? Like, what do the charts tell you, especially when you look at the fixed income? And, you know, I know there's been strength in the dollar. Are you expecting to see that bullish kind of trend continue?
Well, as far as the dollars, I think obviously it's gotten up to where it is, but it's having a lot of trouble getting through 106. It's actually topping out here. So there's other pressures on the dollar as well. And so right now I'm anticipating that we could see 104 before we see 106. I mean, that's just a guess at this point. We're smack dab in the middle of 105. And if you just took the opinion out and looked at the chart, it certainly looks like it may be consolidating to go higher. The dollar to me isn't as big a factor. We're talking about risk, right? And junk bonds, you had asked me about that before. That's a really important indicator to look at for risk. Coming into today, we want to see junk bonds outperforming the long bonds, and we look at that through the TLT. And so far, they are. So if we're looking at HYG, for example, you want to see it holding around these levels. Actually, the level is 74.50. There's a trend line there from the lows. It's now under the moving averages, but it's been relatively risk on. If that changes, then I think we'll see the whole market, given everything we just talked about, and the dollar may actually wind up rising in that scenario, go lower. This 440 level in the SPY, or 4,400, if you will, could easily lead to 4,200.
Yeah, I love watching junk bonds as an indicator, potential bellwether there, as I know you do. Thank you for everything here, Michelle Schneider, Chief Strategist at MarketGauge.com. All your markets is